the mighty and resilient Merrimack River, carving through the communities of our great region. My name is Linda Lorden, proud president of Merrimack County Savings Bank, and like the river that serves as our namesake, we're a constant yet ever-changing presence. Because to us, it's bigger than banking. It's about powering communities and putting people first. It's about knowing where you came from and where you're going. That's Merrimack style. Visit us at themerrimack.com.
Welcome to Radical Personal Finance, a show dedicated to providing you with the knowledge, skills, insight, and encouragement you need to live a rich and meaningful life now while building a plan for financial freedom in 10 years or less. My name is Joshua Sheets. I am your host, and today on the podcast, we are going back to our series on financial goals that everybody should set. And in today's podcast, we're going to continue this series by talking about the need for you to set a goal to be properly insured. And I'm going to define that for you and go over some of the insurances that almost everyone will have and should have. It's been a little while since we've done this series, so let me give you just a quick overview of the idea behind the series. The idea is I want to give you the simple action steps that if you follow these action steps will lead you from poverty to wealth. And these action steps are things that I believe everybody should do. And I'm really trying hard to stay on that idea of everybody, with very few exceptions. These are things that are universal. And my idea is to give you, again, the fundamentals of personal finance, and then to help you to take these ideas and talk about them with other people, friends, or perhaps your children, things like that. So the first step was get a job. I said that if you want to go from poverty to wealth, step one is always to get a job, to start to have some income coming in. Goal two was live on half your income. Just always set a goal of cutting your expenses to 50% of your income. If you could start that from the very beginning, do it. Teach your 16-year-old, spend half, save half. If you need to set a goal and work your way towards that over the next 10 years, do that. But set a goal to live on half your income. And if you do that, you'll always have abundant money available for you. Goal three is give away 10% of your income. If you consistently, over time, systematically give away 10% of your income, you will be far better off and you will accomplish enormously important change in the world. Goal four is to begin a job or a career that has the potential to help you to become a top 20% income earner. The first one was get a job, and any job will do, but then you want to get yourself onto a track that over the next decade, over the next couple decades, you have the opportunity for your career to grow to help you to be a top 20% income earner. There are a few things more frustrating than to wake up at 40 years old or 50 years old and just say, I can't do it. And I can't break into a career where I'm really going to be earning the amount of money that I need to be earning because I didn't plan something earlier in my life where there was going to be growth potential. Generally speaking, the time that most people really pile up the most wealth is in their 50s and 60s when their household expenses are reduced, they have fewer child expenses, you can live on less, and you're at the height of your career. But that only works if your earning power is really high when you're in your 50s and 60s. If you're still working a very basic entry-level job, then it's hard for you to get ahead in your 50s and 60s and become wealthy. Much harder than if you were in a place where you're now reaching your stride and you're in the top 20% of income earners. So you want to have a job or a career that has potential. Don't have to get there today, but you want to have potential. Goal number five was get as much of the highest quality education that you possibly can as soon as you can. You should always get as much of the highest quality education as you can, as quickly as you can. Now, you define the right way to get that education. For most people, that will involve a combination of academics, formal academics, as well as personalized job training or career training. But you want to be one of the most highly educated people in your field and around you. It'll always pay off in the long run. Goal number six, fully fund a Roth IRA. If you do nothing else for accumulation, you want to fully fund a Roth IRA. Goal number seven was own a dwelling place free and clear. Now, that will clearly mean for many people to pay off a house and have an actual house, but if you are younger or just getting started, you want to have some place that you could retreat to and live that you own free and clear. It might be something as simple as a tent you could set up in somebody's backyard. It might be an RV. It might be a little cabin on a little piece of land, or it might be a beautiful condo on the beach. But you want to have some place that you own free and clear so that if life deals you a whole bunch of bad cards, you could retreat there. Goal number 8 is be debt-free for life. Set a goal of becoming and staying debt-free for life. Because if you avoid being indebted, then every option in your life is open to you. Everything is available to you. And your future is not committed to your past, which not only might help you to build more money and help you to have more control of your income and help you to save more money, but most importantly, it will allow you the flexibility to pivot and change as life comes at you. You'll be able to adjust. You'll be able to make quick decisions. If you don't like one career, you can change because you haven't indebted yourself deeply and sold your future. So that's goal 8, become debt-free for life. Goal 9 is for you to buy a house. Everyone should have a goal of buying a house. And it will work out for you in the full amount of time. So set a goal to buy a house. Now, goal 9B was buy a house debt-free, if possible, and ideally when young, especially before you marry. This is where not all of us will be able to achieve that goal. But for younger people, that should be a goal to, at the beginning of life, set aside 5 to 10 years of hard work and accumulate quickly towards buying a debt-free house. And that will pay off for you significantly in the long run. Now, that brings us to today's podcast, where I'm going to talk about goal number 10, which is to always be properly insured against disaster and catastrophe. Always be properly insured against disaster and catastrophe. Now, this is one of those things where the general goal is for everyone, but the specifics need to be thought through very carefully. So let me first describe the general goal. The idea is you want to think about whatever catastrophes could happen to you, especially catastrophes that could significantly impact your finances, and you want to maintain proper insurance against those catastrophes. Now, for the purposes of simplicity, I'm going to talk about this topic in 3 basic categories. I want you to, category 1, insure yourself. Category number 2, I want you to insure your stuff. And category number 3, I want you to insure your liability. And this is, generally speaking, the order that you will want to approach things. Let's imagine that we are coaching a bright young 14-year-old. And this bright young 14-year-old is doing everything we've got so far, and he goes out and gets his first job. He's got a job. Let's say he's doing school 4 to 5 hours a day. He's working 4 to 5 hours a day, earning money at a job, and then that leaves him with another 3 to 4 hours a day to engage in personal improvement projects, getting ahead, running his own business, developing something for himself. And by the way, I think that's about the time budget that most teenagers should ideally have. 4 or 5 hours a day on school and academics, 4 or 5 hours a day on some kind of work, especially a job, so that you can have engagement with people and build your horizon, build your contacts, build your personal skills, and then about 4 to 5 hours a day on personal hobbies, personal interests, other things that you're into, be it sports or reading or coding or hanging out or whatever it is that you're into. And then a teenager, of course, needs about 9 or 10 hours of sleep. So the idea is, all right, where does this young person start with insurance? Well, the first thing you want to take care of is insuring yourself. A good place to begin is just to think about what happens if I suffer some kind of harm to my body. For a teenager, let's assume that we're coaching a student athlete, and this student athlete is hoping to develop his skills, become a college athlete, possibly become a professional athlete in the future. And he's out playing soccer and bad tackle or whatever goes wrong, and now he's got a torn ACL. What do we have? Well, we have 2 basic problems. We have a problem that involves costs of care, and a problem that involves lost ability or lost productivity. Now, for teenagers, of course, obviously, usually the parent's job is to pay, always the parent's job is to pay for the medical expenses. So the parents will usually have health insurance. And of course, he's not generally earning money as a teenage soccer player. But if you take this out a few years until you're a little older, you see that the same thing holds true. So we need to have insurance that allows us to pay for proper medical care, whatever the context for that. And we need to have insurance that provides us with the ability to replace the value of the lost ability. And so in common language, this involves health insurance and this involves disability income insurance. And those are the two first important insurances, especially for young people, to think about. As soon as you have a job, you want to look into the acquisition of disability income insurance. In my opinion, it's more important than health insurance. There's lots of ways to pay for health bills, but if you lose the ability to generate income, there's not so many ways to cover that. Usually this doesn't come into play until you've got your first real job, quote unquote. Out of college, you've got a real job. But as soon as you have the ability to get a real job, you want to look at disability income insurance. Disability income insurance is designed so that if you become sick or hurt and are unable to work and continue to generate income, then you will receive income that will pay for your living expenses. There are two basic kinds of disability income insurance. There's short-term disability income insurance and there's long-term disability income insurance. For people who are young and who don't have very much money, I recommend both of these kinds of policies. For people who are older and have accumulated more assets, then usually it makes sense to drop the short-term disability insurance and just take long-term disability insurance. The quick explanation as to why has to do with how well you would function if you were out of work for a few months. Short-term disability insurance usually kicks in after about a couple weeks of not working, and it pays you out for usually as long as either 3 months or 6 months, depending on the terms of the policy. And so for someone who's young and let's say has very limited income and limited assets, being out of work for a month or 2 months can be really catastrophic to your finances. And yet the risk of your becoming disabled for a short term, a month or so, is actually pretty high statistically. And so it's a good idea for young people who don't yet have a lot of money, don't have big emergency funds, to have short-term disability income insurance. Now, the bigger risk in the fullness of life is long-term disability insurance. I'm less worried about your being in the hospital for 1 month as I am for your being disabled for 10 years in terms of the overall financial impact. If you are disabled for 1 month, although it's unfortunate, you can usually put that on a credit card. But if you're disabled for 10 years, you quickly run out of credit limit available to you. And so in financial planning, it's the long-term disability that we really want to focus on. As you accumulate some wealth and let's say build up an emergency fund to the point where you can get through, say, a 3-month disability and you can pay for an emergency fund, then it's okay to consider dropping the short-term disability insurance if you think it's not a great value. Per dollar of benefit, long-term disability insurance costs a lot more than short-term disability insurance because the benefit is much more valuable. But in general, the short-term disability insurance premiums, because the actual payout from the policy is relatively low, it's capped usually again at 3 or 6 months of income, then the premiums are actually pretty low. So if you have the option and you're signing up for a job and you see the option to check the boxes for disability insurance, I would encourage you, check the boxes. If there's short-term disability insurance, just check it. If there's long-term disability insurance, check it. Now, if you're listening to this series and let's say you're 50 years old or 40 years old and you've accumulated a huge emergency fund and you have a lot of savings, a lot of assets, just check the long-term disability insurance. You don't need the short-term disability insurance, but if you check both of them, all good. So disability insurance pays you money if you're sick or hurt and can't work. And then things like health insurance will help you to cover your expenses to actually gain medical treatment. We definitely want to have some kind of health insurance. And the details will vary depending on what country you live in, whether you have a government health insurance program available to you or it's all private market. It'll vary just in every way. But you want to focus on having health insurance. And if you are younger, you want to think carefully also about various kinds of insurance, especially the kinds of insurance that are optional. So you have a few big categories. First is health insurance that covers medical expenses, hospital stays, surgeries, and preventive care. Then you have things like dental insurance and vision insurance. Dental insurance and vision insurance can be really helpful and really important, again, especially before you build wealth, because they protect you against big unexpected expenses. When I was young, I was in my early 20s, I went to the dentist for a normal checkup, and a normal cleaning. I was having my teeth cleaned, just a regular cleaning. And as the dentist is sitting there cleaning my teeth, all of a sudden, his little dental pick or whatever, he's probing on a little soft spot on one of my teeth, and all of a sudden he sinks this dental pick into the middle of my tooth. And as it turns out, one of my teeth was just completely rotten on the inside. And there had been no indications of this beforehand, but all of a sudden we're like, whoa, what happens? And as it turns out, I got some gauze stuck in my mouth and I got sent to an endodontist, and the next day I had a root canal. And we never did quite figure out why it was there. The best guess was that maybe something with having braces when I was younger, a little bit of glue had gotten and caused I don't know. I can't remember. Who knows if that was right. That was what they said. But I just had this one rotten tooth. The rest of them were all great, except this one was rotten. And I wound up with a root canal that cost me several thousands of dollars. And that completely drained my savings at the time. And it made me wish that I had better dental insurance. I had, at the time, I don't remember all the details, so let me not say things that I can't remember. But it was just an example of how when you're young, a few $1,000s all of a sudden for a root canal that you don't expect can really suck your budget dry. And so these kinds of health insurances, especially the ones that just protect you against catastrophe, are a really good buy, especially when you're young. Now, as you get older, again, and you're more able to be self-insured because you have more money, you may choose to pull back on some of these insurances. You may choose to not carry dental insurance because you can just pay for the things that you need. You may choose not to carry vision insurance because you can just pay for the things that you need. But when you're young, you probably will go ahead and insure these things so that you have stable and predictable expenses. These are the insurances that you definitely want to have right when you're getting started. Good health insurance, good disability income insurance, if available to you, a dental insurance policy, possibly a vision insurance policy. And then the final one of insuring yourself would be life insurance. As you have responsibilities for other people, life insurance becomes much more important. So if you're young and you're single, and if you died today, nobody would be financially injured by that. You don't need to have life insurance. You might still want to get it. I am a big fan of young people having some life insurance. And usually what you want to start with is just some term life insurance, because it feels really nice to know that, hey, if I'm not here, for example, when I was younger, I've always planned that I'll take care of my parents as they're older. No matter what, they're my responsibility. They're my parents. So if they have money, wonderful. If they don't have money, it's still my job. And so knowing that in the beginning, I bought my first $1 million term life insurance policy when I was young and I was single, it felt really great to know that my parents are going to have $1 million if I die. After all, they've invested quite a lot of money in me. And so this is something that would be really valuable for you to think about. And if you can afford $20 or $30 or $50 a month for, a couple $100,000 term life insurance policy, $1 million term life insurance policy, then you might add that to your overall insurance package. But it's a distant second in importance from disability income insurance and health insurance. You want to make sure you have those things in place to insure yourself. Now, if you insure yourself, then you will be able to, no matter what happens, you'll be able to get through it all and fight again. Let's assume that you're a 25-year-old and you had just bought a house, and all of a sudden your house is flooded from the rainfall from a hurricane, and everything that you own is destroyed. Your car is destroyed, your house is destroyed, everything is destroyed. Well, if you can still work, then you can go back out and you can rebuild everything. You can go get a job. Maybe the economy is destroyed in your local market, so you go across the country and hitchhike your way across the country and you get a job in California. You go find something else to do. As long as you're physically healthy and able, you can replace stuff. And so the most important is always to insure yourself. That's why health insurance and disability income insurance is number one. If everything else disappears, but you're still insuring yourself, you're going to be okay. But then after you've got that covered, then you want to think about insuring your stuff. So when we think about insuring your stuff, we can divide this into a couple of categories. We can divide this into stuff you have to have insurance on, and then stuff that you want to have insurance on. So whenever you buy something, there's going to be generally that was too broad of a statement. Many times, things that you own have some kind of obligation to maintain insurance. So for example, in the United States and in most countries around the world, you are obligated, if you have a car, to maintain insurance on that vehicle. This is a legal requirement that is imposed upon you by state law. If you're going to have a car, you've got to maintain auto insurance. And by the way, for the young, they're really serious about this. A few years ago, I had my driver's license suspended because I had a car and I had a license plate on it, and I had left the country and I just left the car parked somewhere, and I just turned off the insurance on it. Well, turns out that some months later, I get a letter from the state informing me that my driver's license has been suspended because I own a car with a license plate on which I don't have valid insurance. And I discovered, hey, don't do that. I later came to find out that my insurance company could offer me just a storage policy, which is what I should have done. I had to maintain insurance on a vehicle that was stored so that they didn't report to the state that, hey, this insurance policy is canceled. So if you're going to own a car, you've got to have insurance on it if you're going to have a valid plate on it. So that's something that's imposed by law. In many other cases, there will be some kind of insurance that is imposed upon you by contract. So, for example, you buy a house and you have a mortgage on the house, where your mortgage lender will generally require you to maintain homeowners insurance on the house. Or in some cases, a landlord will require that you maintain renter's insurance. Or in some cases, you'll rent a storage unit, and the storage unit provider will require you to maintain insurance on your belongings. So this will be either done by law or by contract, where you have to have the insurance. Then the second expression would just be, hey, I want to insure the stuff that I own. And there's many different kinds of insurance that you would purchase for yourself, depending on how important various things are for you. What I would recommend to you is that you insure anything that would be particularly inconvenient for you to do without. Basically, to define that a little bit more, if you could go out today and just buy something over again and it not be a big deal for you, you could probably skip the insurance. But if there's something that would really hurt for you to buy something over again, then you probably want to insure it. The example I think of is when I was younger and we first got into the world of expensive cell phones, I always insured my cell phones, because here I am walking around with this $500, $800, $1,000 cell phone in my pocket. And it would have been very inconvenient for me and quite a hardship if I had to go and purchase this thing again. And so I think buying cell phone insurance for somebody who is younger and doesn't have a lot of money is a very smart idea. You've got this thing that you drop it in a lake, it falls and cracks the screen, whatever it is, it becomes not so useful to you. That's a big deal. Now, a curmudgeon would argue, well, you don't need that phone anyway, you could just do without it. And I would say that's true. However, for many of us, that phone is going to be the single most important asset that is going to allow us to really do all kinds of things we otherwise can't do. If I were completely broke and starting over again and had nothing whatsoever, one of the first things I would do would be to go out and get a good phone, because that can replace the computer for many things. It's a center of connectivity. I can use it to make money. There's all kinds of things I can do with it. And without being connected with good communications and a good phone, life can be really hard. So for someone who is just getting started, having something like cell phone insurance is a really big deal. It's a really smart thing, because here's this thing that I own that if this thing fell apart and didn't work, I would be in a hard place. Now, you go on a little bit, and hopefully you get to the point pretty quickly in your financial life where going out and getting a new phone is not that big a deal. And so I haven't carried cell phone insurance in a very long time. Why? Well, because if I need a phone, I can just go get a phone, and I've got enough backups, I'm good to go. And so not all insurance decisions that you make are forever. It's a matter of the stage of life you're at and what the asset is that's really valuable to you. Let's go on to something like renter's insurance. If you are, let's say, living with a roommate and you're a young person and you're just kind of getting set up, and basically all you've got is a mattress that you sleep on and a bin that you stick some clothes in and a computer. That's not a bad problem. A young person is in that situation, fine. You don't have a lot of stuff. You probably don't need to have renter's insurance. If all your stuff gets destroyed, if all your stuff gets stolen, you're okay. You can go out and replace it. But as your possessions grow, let's say that now you have an entire house and you have tens of thousands of dollars of possessions in there and you're renting, you definitely now want to consider having renter's insurance, because if your things get destroyed or stolen, something like that, you need to protect these assets that would be quite troublesome and annoying for you to go out and replace. Just imagine your house gets flooded. Totally flooded, it's totally unlivable, you have to start over again. Do you need to have some compensation in order to help you get started on the next thing? So you want to protect your stuff and insure your stuff. Now, different kinds of things, different stuff will have different types of policies of insurance available for them. Again, you could get cell phone insurance as just a standard thing from an insurance company, or perhaps from coverage from your credit card provider or something like that. That's different than the insurance on your car, and that's different than renter's insurance, and that's different than homeowner's insurance. And anytime you make an insurance decision, let's say you're buying a homeowner's insurance policy, you'll have different choices. You will have, for example, a standard homeowner's insurance policy, and then you might want to get, with that homeowner's insurance policy, you'll think about, do I want windstorm protection if you're living in hurricane country, or earthquake insurance? Do I want to be protected from an earthquake or not? And fire insurance would be included or not included in certain circumstances. Flood insurance, do I need flood insurance or not? And so go through and make careful decisions on those things. But if you use something that you own, that if it got destroyed and stripped away from you in a horrible disaster, and you wouldn't be able to just quickly go out and replace it with money out of your pocket, carry insurance on it. There is a strong temptation and tendency, especially among young people and especially among young males, to be very cavalier about insurance coverage. To say, I don't need it. I'd be fine. And some of that's true. You would be fine. But it's quite stressful to lose something that's important to you and not be properly insured. And on the whole, having proper insurance coverage for the things that are important to you is going to be money well spent. Could you do without the insurance? Could you play the game and just kind of get away with it? Sure. Sometimes it works out. But the moment it doesn't work out is the moment you're really glad to have the insurance. When your car gets stolen, when your phone falls into the bottom of the ocean and it's irretrievable, when your house gets flooded and stripped away and everything in it destroyed, you having financial stress added to that is something you don't want. You want to avoid that kind of stress if at all possible. Now, there are a couple of easy ways to avoid this, some without insurance policies and some with insurance policies. If you don't want to carry insurance because you feel like I'm invincible, then make certain that the stuff that you own is always super, super cheap compared to your overall resources. So if you don't want to carry phone insurance, fine. Just make sure that you've got a $200 phone and you earn $10,000 a month. Then it's no big deal. Yes, I'm engaging in some hyperbole here. If you don't want to carry, full coverage auto insurance, great. Drive a $5,000 car when you earn $15,000 a month. You don't need full coverage in that situation. One of the things that I have, so by owning something cheap, you can just drop the insurance. If you don't want to drop the insurance and you don't want to have full coverage, it's probably an indication that you actually have too much fancy stuff that you can't otherwise afford. What I mean is, I've seen many times, young person goes out, buys a brand new car, and 23 years old, 22 years old, driving a $40,000 car, and says, well, I can't afford to have the full insurance. To say nothing, of course, if the lender requires full coverage and all that. But I can't afford these hundreds of dollars per month. Let me tell you, friend, the problem is not the insurance policy. The problem is that you bought too much car as compared to your income. So if you buy less car, then the insurance is a lot cheaper. So what I mean is, if you're not a fan of insurance, just make sure that you just have and own and cheap stuff that would not be a big deal if it was destroyed. And if you can't afford the insurance easily, it's a sign that you can't afford the thing easily. Basically, my rule is something like, if you're going to go buy something expensive, you should probably be able to buy it today and then go out and rebuy it again tomorrow and be just fine, especially if we're talking about a consumption item. It's kind of a good rule of thumb for whether or not you're staying within your overall financial capacity or whether you're overspending. If you can buy something twice over, great. Go ahead and buy the fancy thing. If you can't buy it twice over, it means that you're probably spending excessive amounts, which you definitely want to avoid because it leads to a whole lot of stress. So those are some comments on that kind of insurance. You want to insure yourself and you want to insure your stuff. The third big category of insurance is you want to insure your liability. Liability means things that you are responsible for, because there are all kinds of things that can happen to you that all of a sudden you're found responsible for something and you've got to pay for someone else's loss. And it's not just the loss of your stuff. So the best example would be a car, right? You go out and you purchase a $2,000 car. No problem. You could easily buy one twice over tomorrow. But now, this afternoon, you get a text message, look down at your phone text message, and drive into the back of somebody else's $300,000 car. You are responsible to make that $300,000 car whole. It doesn't matter whether you ran into it with your $2,000 car or with your own $50,000 car. You're responsible to make the $300,000 car whole. There are lots of liabilities in life that can emerge. And if you want to protect your wealth and build wealth, you've got to avoid it disappearing in something silly and foolish. There are many levels of liability. Usually, when you own a significant asset, there will be some obvious liability insurance policy available for you. Again, when you buy a car, you have a couple separate choices to make on your auto insurance. First, you think about insuring the thing, and then you think about insuring your liability. And here's where we often cheap out. I have cheaped out many times where you think, I'm not going to worry so much about liability. But in reality, this becomes more and more and more important as your wealth grows. And so you want to think about, what's the harm or damage that I could cause someone else, or that could be caused to someone else by my property, and how do I protect myself against that? Max out your liability insurance. Max out your liability insurance on your car. If you own a home and have a homeowner's policy, max out your liability insurance on your homeowner's policy. And then the big obvious one, which is always the best deal in insurance, is purchase an umbrella liability income insurance policy. My CFP exam instructor, Ken Zahn, he was years ago, he said, if you ever see on the Certified Financial Planner exam an option for buying more umbrella liability policy coverage, then always do that. That is the deal. It's the cheapest deal in the insurance world, and it is one of the best deals. Those are the obvious ones that you want to cover: auto liability, homeowner's liability, and then an umbrella policy. And then, depending on your occupation, you will usually have some kind of specialized liability policy. It may be something like errors and emissions insurance, or medical malpractice insurance, or various, board of directors insurance, things like that. And those will be pretty straightforward for you based upon your job. But you want to insure your liability and be consistently thinking about, do I have the appropriate coverage? In addition to these kinds of insurances, there are many other specialized policies. I don't wish to go deeply into them, but from time to time you may purchase them. Things like travel insurance, things like sometimes when I travel, I think about an evacuation insurance policy. I don't worry too much about it in some cities, but in other places, let me make sure that I get this evacuation insurance policy in case a war goes off while I'm traveling. There will be all kinds of individual insurances that other people think about. You'll think about things like long-term care insurance or various kinds of critical illness policies. The insurance industry is enormous, and insurance agents like to sell policies. What I want to close with is to say to you that you should have a balanced perspective when it comes to insurance. You should not be an excessive insurance lover. Recognize that insurance is a direct cost. And when you're able to self-insure a risk, then that's generally what you should do. But nor should you be an automatic insurance hater. I would recommend to you, if you've never listened to it, go back and listen to episode 91 of Radical Personal Finance called Do I Need Insurance? A Mental Model to Analyze Methods of Dealing with Risk. I will link to it in the podcast episode notes for you. Do I Need Insurance? Episode 91, A Mental Model to Analyze Methods of Dealing with Risk. And I go through how you can assess a specific risk and understand, is this something that I should buy insurance for? Undoubtedly, there are many other comments I could make that you could think of in the context of insurance. For example, I have podcast episodes dedicated to the idea of avoiding the need for insurance policies on, say, your health by investing into your health. So if you can stay healthy and strong, then great. Back to my soccer player example, let's say that you can afford $10 a month for health insurance or $10 a month for knees over toes guys subscription. We'll probably do bulletproofing your knees programs with knees over toes guys or whomever. Get good coaching, do those kinds of things to try to reduce the risk of blowing out your ACL. But at the end of the day, these products are amazing. And I think we should appreciate the insurance industry and the insurance products and the marketplace. When I was 23 years old and started selling life insurance for the first time, I had no contact previously with the insurance business. I hadn't really purchased any insurance other than auto insurance. I was so infected by the personal finance industry to say, well, you should just self-insure anything. I don't like insurance. Insurance agents are jerks and out to rip you off and blah, 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 that I wasn't super confident in even the whole idea or the product of insurance. I consider now, today, insurance to be one of man's greatest inventions. Insurance, if you look at so much in the history of the world, the development of good quality insurance policies has brought so much good to the world. Whether we go back 500 years and men figured out how to insure a merchant's journey in case of shipwreck and insure his cargo, an amazing thing that helped merchants and helped to grow the economy. If you go back to the invention of life insurance, what an amazing invention life insurance is, so that a man can protect his family, and instead of his wife and his children being left destitute and living on the street or on public assistance of some kind, he can just take care of it. I mean, with a small check every month or every year, it's just an incredible thing. Auto insurance, homeowners insurance, all of these products are truly remarkable inventions, and we should be grateful for them. So the idea is not that we want to spend more money than we have to on things that we don't need. Hopefully, we waste all of our money on premium payments of insurance because we never collect on any of them. That's the idea. But man, when something bad happens, you are so glad to have insurance. And let's appreciate it for what it is, and let's make sure that you are always properly insured. As your wealth grows, when you're young, and by young I mean both young chronologically or young in a wealth building journey. When you're just getting started, you got to be aggressive about creating, right? Finding bigger opportunities, earning more money, finding higher returning investments. Those things really matter in the beginning. But then as time clicks on and you start to achieve success, then the most important thing becomes not losing. And for someone who's a multimillionaire, it's much more important not to lose all his money than it is to double his investment rate of return. For somebody who has accumulated funds, it's much more important to protect against liability than it is to save a few dollars on insurance premiums. So recognize that as you pass through a wealth building journey, your models will change. Regardless of where you are, always be properly insured for your wealth building journey. Insure yourself, insure your stuff, and insure your liability with whatever insurance products and policies are appropriate for you at each stage of life.
Okay, it's official. We are very much in the final sprint to Election Day. And face it, between debates, polling releases, even court appearances, it can feel exhausting, even impossible to keep up with. I'm Brad Milkey. I'm the host of Start Here, the daily podcast from ABC News. And every morning, my team and I get you caught up on the day's news in a quick, straightforward way that's easy to understand, with just enough context so you can listen, get it, and go on with your day. So, kickstart your morning. Start smart with Start Here and ABC News, because staying informed shouldn't feel overwhelming.